Buddy, it's Brian Shannon from AlphaTrends.net. Today is Friday, the 22nd of September, 2017. Hope you had a good week of trading. The markets were a little bit mixed here this week. The Nasdaq and the biotechs lost a little bit of ground, but I think those biotechs are setting up for some upside here in the near term. And S&P 500 gained a little bit of ground, but the Russell 2000, which is only up 7% year to date, did close at an all-time high. So let's take a look at the charts and make some sense of it all. Here's the S&P 500 using 30-minute time frame. That is, each candle is 30 minutes, and I've got a 5-day moving average. You see up here it says 65 moving average. That's because there's 65 periods, and over the course of each day there are 13 30-minute periods. So if you're looking at a 5-day moving average on an intraday chart with 30-minute candles, you use 65 of those. Anyways, we closed below that 5-day moving average and below the volume weighted average price for the week, which is right here. So, we're digesting gains a little bit. We're just coming off of all-time highs and still a very healthy pattern of higher highs and higher lows. Next week, we'll want to see that basically 248 should be our first important area that we want to see this market hold above. If we're to dip down further from there, then it's possible we get a test of the 50-day moving average. But all in all, we're still in a major uptrend here, and if you're looking for shorts, then they should be very short-term trades because, again, the buyers are in control. The Nasdaq, which we said lost a little bit of ground, came right into its rising 50-day moving average and to this area where we've seen it have some support earlier this month as well. So if we take a look at the 30-minute time frame, you can see we're stuck below a declining 5-day moving average. That tells me the intermediate term trend we want to look at a little bit cautiously. You don't want to be buying into this weakness, instead waiting for the intermediate term trend to turn back higher again before you decide to get involved. Buying a pullback works most of the time in a bull market, but how much pain do you have to take is the question. Now we're at an area that's likely to become support, but we'll see what the market in fact gives us. So going into next week, just a little bit of caution in both of these markets. The Russell 2000, as I said, was the star this week with its all-time high. One thing to point out, and I've mentioned this a couple times on Twitter as well, is that if you look at this breakout to new all-time highs here, you have to be very careful with chasing a breakout, because you have to ask yourself, where has the market come from? It's basically come uninterrupted from 134 up to 144. And if you look at the prior all-time highs that this market has made after a move, you can see they were quickly rejected. Now, I'm not calling this a blueprint, but it certainly tells us that you want to be very defensive in regards to the Russell 2000 up here, and chasing after a move of 10 points or 8% is probably not the best idea, in particular because if you look at a measured move objective, we'll just call this 134, and that being point A, and we'll call this 141, and that's pretty conservative or aggressive rather. If we are to meet the measured objective, then we would be looking at basically the height of this pattern, which is this first move rather, 7 points. Add that to the 138.5, and maybe we get up to 145.5. That's about as much as you could stretch that measured move objective. So when we look at a 30-minute time frame, we're still clearly in a strong uptrend. We have higher highs and higher lows above a rising 5-day moving average. It's above the volume weighted average price from this gap. It's above the volume weighted average price for the week that we began right here. So there's no sense in selling short just because because prior breakouts have failed. Instead, what we want to do is look at it and say, here's a reason to look at this market and be a little bit defensive in our thinking, and be prepared with stops to lock in gains. Or if you're really aggressive, start looking for signs that maybe it is in fact a place to sell short. But the evidence simply isn't there yet that would suggest it's a low risk place to sell short. The semiconductors, this group, again, I guess they gained a half of a percentage point, which is still a nice gain, especially when you look at the year-to-date gains on this group. They have clearly been a leader. Looking at the weekly chart, we're above a rising 10, 20, 30, 40 week moving average. That's a bull market. I'm not here to try to pick when the bull market ends, and I will tell you well after the fact when I think it's over. It would have to do something like this and get that longer term moving average flat to heading lower. So it's going to take some time, I think, for a group like this to top out. Meanwhile, you look at it and say it's in a great uptrend. Continue to ride that trend for the time frame that you're engaged in the market on. From an intermediate term perspective, I think that a little bit of settling down in here, and here we're looking at 65-minute time frame. So the market is open from 9:30 to 4 each day. If we divide that into 6 equal time segments, we get 65-minute candles. That's why I use 65 instead of 60. And then again, to use consistency to find the 5-day moving average, over the course of 5 days, there are 30 of those 65-minute periods. So that will give us our 5-day moving average. Anyways, back to the analysis here of the market. I mean, we could look at a trend line and see something that looks like maybe this, or even speed up that trend line. I think though that maybe we digest a little bit, and this what we would want to see is the prior resistance hold his support near about 89.5. We've also got a 20-day moving average in that area, so those are levels to consider. Now, biotechs broke down here a little bit today, but I think that was I think it's very likely to be another bear trap, similar to what we saw over in here. Earlier in this year, we had been riding the year-to-date volume weighted average price, and as we broke below that, I had mentioned that I thought it was a bearish trap, that we were going to look for the buyers to regain control at the volume weighted average price since prior to the election, and that's exactly where they showed up. Now, when we go to let's look at a 65-minute time frame, and you can see here that if we take a look at the most recent move from that low, that this is where we are, we're still holding above that. The buyers regained control, by the way, right over in here as it got back above the volume weighted average price from this peak in late August. Now we're still, I've been pointing it out to subscribers all week. We have lower highs and lower lows, and we have a declining 5-day moving average, so we don't want to be long. In fact, we got stopped out of our final piece of our long position from down at 312-ish. But looking at this market right now, we are clearly have a declining 5-day moving average. I think that the key level where the buyers really exert that they have fully regained control is, one, if we can if we can hold above this low from today, being Friday, if we can hold above that and then maybe come up, break this trend line, pull back a little bit, see that 5-day moving average flatten out and begin to turn higher, and then as it breaks 334, that's the scenario that I think is most likely for the buyers to take control. Obviously, I have no idea what's actually going to happen over the next 5 days. That's why I do these updates every single day for subscribers, to look at the key levels. What we were looking for coming into today was actually something that looked like this, but we didn't have a position, so a gap down doesn't mean anything to you if you don't have a position. But biotechs, I think, clearly should be on your list of stocks to look at for the next for the next week. Earlier this week, I had mentioned a couple of trading ideas, and talking about them as what I call watch list ideas. They aren't the best ideas that I bring to subscribers. You have to be a subscriber for that, but I had outlined cars as a stock to keep an eye on. One, because it's got a big short position, 24 million shares. Based on their average daily volume, that would take 15 days to cover. So I had mentioned this on Wednesday, and I said it's not quite ready yet because we have a declining 5-day moving average. So there was no reason to be a buyer in there. Today, the buyers regained control, and I don't think, I'm pretty picky when it comes to buying. I think what we want to see is that this stock takes a day or so to maybe settle down in here, but this is one to keep an eye on for potential upside going into next week. I had also mentioned TTD. What I didn't mention was that what we were looking for was for the stock to pull back, and then so I'd mentioned it on Wednesday as a watch list idea, but subscribers knew we were looking for it to pull back and then test this breakout level here on the intraday time frame and then buy it on strength. So we didn't get involved in that one. We did get involved in SBAC this week, and this was an interesting stock because we got involved on it this day right here, and that very same day we took a 70-cent gain on 1/3 of the position. The point of the 70-cent gain wasn't because we wanted to make 70 cents. It was because because we wanted to reduce our overall risk. And then what we did was we set our stop just below this low on the balance of it. Well, we got stopped out of it, and overall, it resulted, because we took a 70-cent profit on a third of it, and then we lost, I think it was maybe 28 cents on the final two-thirds, we ended up getting stopped out of this stock with an actual profit. But more importantly than that very small profit, and basically covered the commissions, we avoided this big mess because we had a plan and we listened to the message of the market. We didn't try to say, well, wait, I think it's a good company, I'm going to give it down to here. There's no reason to take massive losses like that. And here, what for a lot of people might have bought on Wednesday in the 149s ended up being a big loss for the week, we got out of with a profit. So that's the focus of Alpha Trends, to bring low risk, high probability trades each day, and then to manage those risks, those trades very aggressively. And it allows us to hold stocks like we currently have a position in PSTG. This is one that, yesterday we bought it over in this area, and we had sold a third. It dropped precipitously yesterday afternoon, but our stop on the balance was under here. Today we raised our stop to underneath today's low, and I think it's likely we're going to raise it a little bit further. But PSTG is another one that, if you look at it, 14 million shares short. The stock came public back in late 2015. It's above, it's broken beyond this band of resistance here. So now this stock looks like it should be able to continue to move higher, and what we want to do is hold those two-thirds shares as long as we can, similar to the way we've been holding SGMS, that we bought SGMS right over in here. We took a third off pretty quickly with a gain of about 27 cents, but then we got stopped out of another third with a gain of 573, and our stop is currently $42.25 per share in SGMS. It's just been going perfectly the way we wanted it to, and we're listening to the message of the market to tell us when to get out. It's all about objective, consistent approach to the market and listening to the master, which is truly the market.